Good morning. My name is George Blaufus. I'm part of the Agency Agent Development Team for National Flood Services, and I'll be conducting the webinar this morning. Along with me co-hosting is Heidi Keibel, who's also part of the Agent Development Team, and she'll be handling the chat line and also the polls that we're going to be running today. So feel free to use the chat line for, the chat line for any questions you may have, and we'll get started. This webinar is about evolution and effects of map changes. Kind of give you an idea of how maps come about, and the reason why we're doing this is because there's been some discussion about reauthorization, which has been extended to the 21st, which is just coming up, that reauthorization may include map changes nationwide. So with this, they're talking about putting in a budget to look at maps and update them more regularly. So there could be more map changes in the future. So today the objectives for today, we're going to go over what flood maps are. We're going to discuss the community and FEMA involvement and how they become a cooperative. That's a funny way to put it. What is a flood? We're going to get into a little bit deeper than maybe we have in the past. The map development. We're going to talk about flood zones and the effects of each one and how they define specific risks. The state of the NFIP and how it evolved to where it is, and the map change impact they have on not only the communities, but the insureds and agents. So let's get started. A flood insurance rate map is also known as a FIRM. If you can see the picture on the right, you can see that in the bluish areas, those are areas that are considered to be higher risk than the areas that are not blue. And what happens is that the program run by FEMA lets the community know about their flood risk. And these maps show various levels of the risk. And we're going to get into that and show how they differentiate one zone from another. Rates are determined based on these separate risk levels. It also enforces community ordinances to make sure that when they do develop an area or when they have existing buildings somewhere, that they take measures to minimize flooding in those areas. It also shows building and compliance standards, which we will get more into a little bit later, about what's going to be required by a community when you build on property. It also is designed to show why areas are special flood hazard areas versus non, and for protecting federally backed loans in areas where people are more prone to flooding. And we're going to show that it's a collaborative effort, not just between FEMA, but also the communities that participate in the program and the property owners that have buildings on those properties. So let's talk about participating communities. FEMA, which has decided to put together, or the federal government, to have the flood insurance program, agrees to make flood insurance available to communities. Those communities, in accord with these rules, they get a laundry list of items that they have to follow to become a participating community with the federal government. It is to have some kind of mitigation plan, building compliance, which we're going to explain, and a laundry list of other ideas of data and other documentation to keep on board. So when they have these maps, they can document why they are the way they are. So let's talk about what is a flood. On here it shows that it's 2 or more acres or it's 2 or more properties of normally dry land. When we talk about this, we're talking about singly deeded land of 2 acres or more by one particular entity. It could be a deeded property, a single property owner, it could be a business, corporation that has a particular property that is at least 2 acres or more in size. Also, it could be 2 or more properties. Keep in mind that it does not need to be 2 properties that are adjacent to each other, just affected by the same flood event. And this is of overflow or inland or tidal waters, such as storm surges on the coasts, dam breaks, rivers going over their areas, and levees that break. It's also accumulation of runoff of surface waters from any source. So, for example, when you talk about two properties, say you have a water main break on a street and the water goes directly into one house on a lot, that would be considered two properties because the street is owned by most likely a community entity like a state, county, or city, and then the owned property on the other side. So those would be considered floods. And then you have mud flow. Now, mud flow is a little bit different than the above because it is a river of moving mud, or it has more water content than debris or mud, or grade content. So mud flow is a further definition. By definition, we refer to it as a chocolate shake, like on the left. And if you look on the right, you have landslides, which is more like chocolate cake, comes down in big chunks. It can have some water in it, but it was primarily earth versus water, then it would be considered landslide, and that is not covered by the flood program where the mud flow is. So we cover the shake, but not the cake. In addition to that, when they're looking at maps, they also look at shorelines along lakes or similar bodies of water, as well as rivers and oceans. So for example, since erosion is covered under the flood program, sudden and immediate erosion around or subsidence of land around a shoreline like a lake or similar body of water would be covered under the flood program, or sudden and immediate waves or currents of water exceeding normal levels would also be covered under the flood program. So if you look down to the picture below on the left, you can see sudden and immediate erosion by a river that maybe got up to its banks and was moving very swiftly and eroded the earth around it. Then you have the example on the right where wave action has gradually taken away that cliff line to the point to where the building is starting to fall in. That would not be covered under the flood program because gradual over time is not included in erosion coverage. So let's talk about the map information guidelines. Heidi, how are we doing with the chat line?
Hi, George. Right now, we don't have any questions in the chat line. This is a kind of shy group.
Okay. Well,
so
hopefully
later we'll get more questions.
That would be great. So when it comes to map information guidelines, the main reason for these maps that they look at is the hydrology. As you can see from the example on the right, you can see the river going through that is at normal levels. Then when it gets to its banks, you have different color code depending upon how much rain it is, whether it's a 100-year floodplain, which we will describe in more detail later, and the flow areas as well. So that's the hydrology part of it. When they know there's water in an area like a stream or creek or a river, or flow areas like alluvial lines, which I'll get into in a minute, they will mark those and know exactly where their water is coming from. Also, one of the big causes of flood is infrastructure deterioration. I know out here in California where we have minor earthquakes that happen all the time, even though you may not be feeling them, that constant vibration of the water mains is causing them to break, especially the older infrastructure. Then it's caused flooding in the past. And more recently in Los Angeles, I think last week there was a major water main break that flooded a portion of downtown Los Angeles. So this is something that's ongoing. Also, when they're looking at map guidelines, land use, as there have been recent development there. As we build more and more, it changes where water goes and how it flows. Are we building on watersheds or alluvial areas? Now, when I talk about alluvial, if you've ever seen an aerial photograph of a mountain range or flown over in an airplane, you can see the crevices that come down the mountainsides. Those are called alluvial lines. So during heavy rain, storms, or snow melt, water kind of finds its way down the mountains and hills and creates these crevices, and they're called alluvial lines. And then when these alluvial lines hit the base of the mountain, they start to spread out, and those are called alluvial fans. And they change over time. So as rain and snow melt continues to go over time, over years and years and years, those alluvial lines start to erode a little bit, get deeper, and create more of a water flow. And then that can change the fan at the base of the mountains where water disperses out. So that's another map information guideline they look at. They also take historic flooding statistics in that particular area to see how much water's been there, where it goes, and how often it happens. And then they also look at the community to find out the mitigation. What are they doing to prevent flooding? Are they building levees around the rivers? Are they putting in culverts and drainage areas to capture runoff and store it in another area away from where the buildings are located? Are they planned or are they needed? And what stage are they in? So those are some of the mapping guidelines they look at when FEMA comes in to redo maps in a community that is participating in the flood program. So let's talk about the flood insurance rate map, or FIRM evolution. So it has to be in a participating community, and like I said earlier, they have a laundry list of items they agree to. And then it is a collaborating effort that goes between FEMA and that participating community to accept a map based on specific data. So FEMA and their Army Corps of Engineers and contracted engineering companies look at the area and find out, using the issues that we discussed in the slide before, and come up with where they feel the flood map and the flooding will occur. And conversely, the communities will do a similar type of study with data that they have and use and come up with their idea of what these are. If it's going to be a new community, those are called FHBMs, or flood hazard boundary maps, because they haven't been adopted yet. They aren't considered flood insurance rate maps yet. So if it is an existing community and they're getting map changes, then it would be the new preliminary FIRM map. So that's the difference between the two. Once those maps have been revised in agreement between FEMA and the communities, they come up with a preliminary FIRM is introduced, and it has a firm date attached to it when the map will actually make the changes adopted by these preliminary maps. At that point, word is sent out to those that are affected by the map change, and a public meeting is held. And there's always going to be someone from FEMA representing that particular public meeting, as well as community officials. They'll have map panels available for people to look at and what the effects are, and there's usually someone there that talks about insurance and how these map changes will affect their insurance and whatnot. Now, let's talk about flood zones. Flood risk zones are designated from special flood hazard areas, or SFHAs, and then there are non-special flood hazard areas. The high-risk zones are designated by either A or V, and each one actually has a little bit different level of risk to it. So, for example, an AE zone, the E stands for elevation. So those are high-risk zones. A stands for accumulation, where water accumulate in or through an area, and it has what they call a distinguished elevation to it. So like the picture here shows you in zone AE, it'll show you the lines about how high the base flood elevation is, which is established water level. So base flood elevation is an established water level. The higher it is, the more water that goes into that area. You have unnumbered A zones that are usually a foot or less, and they have water that runs into an area. You can have ponding. You can have water standing in an area and running through it. AH zones are more specific to ponding, where water will sit in low areas and just sit there for a while. AO zones are areas where water will, usually it's on some kind of an elevated plain, or desert areas are very much AO zone-like, because water tends to run over the hard-packed desert rather than absorb quickly, but it doesn't stick around long. So it kind of goes between 1 and 3 feet in height and runs through an area and doesn't stay. So once it's flooded, the water tends to wick away pretty quickly. A99 zones are basically an area that has had some sort of mitigation to it that is considered a standard. They've met certain standards, but there is still a risk of flooding. And AR zones are accumulation zones that are under restoration, or there's some sort of restoration project in motion to prevent flooding. V, which stands for velocity, has similar type of designations where a VE zone shows elevation based on wave action and storm surge. Unnumbered V means that you might be in an area that is up above on a cliff area or a rise area where the V zone, where the high amount of water will come in at a certain level, about 1 foot, and kind of go in there. And VO zone is where kind of wave action will wash in and wash back out. Non-special flood hazard areas, B, C, and X. B and C are usually more moderate. B and C zones are usually a buffer between an X, which is low risk, and a high risk zone, A or V. And because they're not exactly, they being FEMA, may not necessarily be sure where the water is going to stop between the high risk zone and the low risk zone, so they'll put a buffer zone in there called a B or C. B zones are generally more apt to have water flow than C zones, because B zones normally are in areas where there are no flood mitigation projects planned or going. So it's usually in areas designated that have free-flowing streams, creeks, rivers, the ocean where there's no seawalls, that kind of thing. Where C zones generally have some sort of mitigation in the area, and so they are areas that will have some sort of risk, but it might be, it's designated separately, so they can do it more for statistical purposes. And then X zones are considered low risk. So when you look at all these special flood hazard areas, and even the non-special flood hazard areas, each one has a separately defined area of risk and the amount of risk in that area based on the flood maps. How are we doing with the chat line, Heidi?
I am just talking with Godfrey right now about some continuing education matters, but I don't have any other questions in regards to mapping.
Okay, great, thank you. Now, flood zone effects. A flood AE zone and VE zones are inundated. They're called a 1% annual chance of flooding, or a 100-year floodplain is considered an annual chance of flooding for 1% any given year. And an A99 zone and AR zone are low premium special flood hazard areas. Now, when I say low premium, if you're an agent and you've written a preferred risk policy in BC and X zones, that would be the same rate as an A99 and AR zone, those package deals of, say, $250,000, $100,000 for contents and coverage. If you're in a special flood hazard area and you have a structure there, you have a 25 to 30% chance of flooding over a 30-year mortgage. So even in the A99 AR zones, you do have a high chance of flooding. So a 100-year floodplain doesn't mean you're only going to have a flood once every 100 years. It means you have a 1% chance of flooding in a given year, which over a 30-year mortgage is a 25 to 30% chance you'll have one. Zones B, C, and X, as we said, are low to moderate risk. But just know that more occurrences happen in B, C, and X zones than any other zone. The reason being that most of the country, matter of fact, a great percentage of the country are considered low to moderate risk zones. So there's more area to flood. Also, we've had flooding in areas that had never flooded before, so they weren't really on the radar for maps. And then when you look at something like Harvey, which was in Texas area, statistics by FEMA said that less than 16% of those people had flood insurance, and they're mostly in low to moderate risk zones. When you look at Irma just after Harvey in Florida, less than 9% of those people had flood insurance because they weren't in special flood hazard areas. Matthew and Michael on the East Coast in Virginia and the Carolinas had less than 4% of those people had flood insurance. I know state floodplain management in California says that almost 80% of the flood occurrences in California because of infrastructure deterioration are in low to moderate risk zones where people mostly do not have flood insurance. So let's talk about the NFIP. It is the #1 natural disaster when it comes to losses to structures. 85% of all federal disaster declarations are considered flood-related. So when you look at the map on the right, when you see the areas that they have, those aren't the only areas that get hit. Natural disasters don't know to only go in special flood hazard areas. The average cost to the taxpayer every year is $8 billion since 2009. So that's an average of $8 billion in losses to the United States every year due to flood. And most maps are out of date. It seems that when you talk about the evolution of a map and how long it takes by the time they do the engineering, by the time they've taken in all the account of development and all the mitigation projects, go to the community, find out their statistics, come up with an agreement, get the map in. It can take a couple, 3 years. And sometimes by the time the map is adopted, there's been some changes in the flow, watershed, development that need make further changes to the water flow. So this is a constant process. So since most maps are out of date, FEMA, based on what we've been hearing from the reauthorization folks, is that there's a good chance that they're going to be more aggressive in making changes to the flood program and maps. So, flood risk. As you can tell from our discussion, it changes over time. Could be changing weather patterns. It could be infrastructure deteriorating faster and faster, overdevelopment in areas. It could be not planning for water and minor erosion that can cause sudden and immediate to be more and more of a peril. So maps are congressionally mandated, and they are updated basically when time and money will allow. But when you look at the slide on the right, the disaster side of it, you know, there's a response time that has to be handled. There's a recovery time. What are the mitigation projects that have gone in? Have they actually reduced the risk or not? What kind of prevention does the community do when it comes to these disasters, and how prepared are we for those disasters? That is all part of the flood risk that we all have to look at. So, flood impact. This is what happens when you have map changes. There are 4 ways to go with it. If you begin in a low-risk zone, you could be changed to a special flood hazard area. That's one way to go. Another way is go from a zone A or accumulation zone. If you're near a coastline, you could be changed to a V zone. I know of some on some coastal areas that are going through this right now. Now, there's also a chance that if mitigation projects have been done or water flow changes have been documented to change, you could be going from a special flood hazard area to a low to moderate risk zone. And then there are also those people that will see no change in risk. So just because a map change is coming doesn't mean you're going to be required to buy flood insurance. So what happens when you have a situation where you move from a low risk zone to a high risk zone? Well, I can tell you that if you speak with the realtors, the National Association of Realtors, they will tell you that the 2 biggest problems are property values. You can probably bet that if there's somebody gets put into a special flood hazard area and the rates are, or they exist in one, and the rates are going up at specific amounts every year, that those property values either hold or held down or drop. It also minimizes real estate transactions because less and less people want to live in special flood hazard areas because of the cost of flood insurance that is continually rising. And so it minimizes real estate transactions, plus the fact that if some of these rates are getting into the thousands and thousands of dollars, it can render your property value to be pretty much useless when it comes to transactions. You also can get mortgage issues. Can you qualify for a loan with the additional charge of flood insurance? Or you have a mortgage and all of a sudden your rates are going up at increasing levels to the point to where you can't afford them anymore. There have been cases where people have walked away from property because of these costs of going up. So these rate increases are becoming more and more of an issue that FEMA is trying to address with reauthorization. So we'll see how they go with that. Now, we're going to talk about letters of map change, and this is something that you can advise your clients on a fairly regular basis. So, letters of map change. You know, before we get into this, I think we have a poll to throw out there. And Heidi, are there any questions on the chat?
I don't have any questions on the chat right now. When we get closer to the end, I'm going to go ahead and do some housekeeping things. George, which poll did you want me to launch? I know we have a couple that are out there.
The first poll I wanted, there was the first one that was out there.
Okay.
Let
me go ahead and launch that. So in this poll, we're asking erosion is which one of the following? Only covered from when overdevelopment causes extra runoff, only covered near waterways and lakes when sudden and immediate, or always covered loss near waterways. Few people are answering. This could be a stumper, George.
Yes, it might be a little bit. I guess we're done.
Let me end the poll, and I'll share those results for you, George.
Okay. Well, if you said only covered near waterways and lakes when sudden and immediate, you would be correct. Always covered near waterways, if it's gradual erosion, it would not be covered under the flood program. So thank you for that. So let's talk about letters of map change. So that's a general term, and it talks about that when they being FEMA and the communities look at an area, they tend to shoot with a shotgun versus a rifle, if you get my drift. They don't have the time to go around and check out every piece of property and find out where the undulations are, where the rises are, if there's a building that's built up on a berm somewhere or they've brought in fill to build it up higher. They just kind of do a general look at a general area. And so when those maps are done, you can see the photo on the upper right-hand side where a building is up on a rise. They being the mapping people, may not have seen that originally and not be aware that that is there like that. So what can be done is that either the community or the property owner can apply for a letter of map change. So more specifically, a letter of map amendment, or LOMA, would be considered one or two properties, and these are normally done by the property owners, where they get a surveyor that comes out and does what they refer to as an elevation certificate, which we will be getting into a little bit later on the specifics. And they look and see, and that surveyor looks to see if the lowest portion of the foundation is above the established water level or base flood elevation. If it is, then there's an application process that can be done. Go through FEMA, show the documentation, and then if FEMA agrees with the findings, they can issue a letter of map amendment that removes those structures from the floodplain and deems them in either a B, C, or X zone, not in a special flood hazard area. Then you have letters of map revision, which are always more than 2 properties. Normally they would be some kind of a development like the one on the lower right-hand side, where a developer is coming in and putting in a massive amount of buildings, either residential or commercial, and they're putting in a project basically. Or this is where the community has come up with additional data and said to the FEMA mapping folks that the data we find, we've done some mitigation, these particular properties are no longer in a floodplain because of this data and these documents, and they can get, and that way the community can get that floodplain removed from specific areas, and that would be a letter of map revision. So are there any questions on that, Heidi?
Not on that in particular, but I am going to stop you for just a bit, talk about a couple of different things. One really good resource, especially if you're looking at these map changes, is actually FEMA.gov. So if you go to FEMA.gov and in the search engine, you can just type in LOMC, LOMA, or LOMR. FEMA has some really good documents. Sometimes you can find some other video trainings on that website that kind of explains more about that particular process. And then Gottfried asked, what kind of policy discounts would you get if a person owns 2 buildings in the same map area? Gottfried, the NFIP does not offer discounts for the more policies that you're right. So if I'm going to my insurance agency and I write a homeowner's policy, I have an auto policy, sometimes they'll get discounts because you're writing more than one policy. FEMA does not do that. Their rates are pretty standard throughout. The only discounts that a person might qualify for is if the community gets some discounts, and the discounts are taken if the community goes above and beyond what the minimum requirements for the flood program are. So there's not a lot of discounts other than that in the flood program. Your different flood zones may have different rates. So the BC and X flood zones, which George talked about, are going to have much lower rates than if you get into some of the A's or your V zones. Heather wanted to know, can we get LOMR information for new communities in our area? Heather, I typed earlier in our chat line a resource, msc.fema.gov, and that is FEMA's Map Service Center. That's a good place to look for map changes. And you can also contact your community officials, who should know some of the mapping information, certainly. So look for a floodplain manager, or even start with the section in your community that approves building permits. They might have a connection to that floodplain manager, and they should be able to keep you pretty much up to date as far as what's happening in that community.
Thank you, Heidi.
Welcome.
So we're going to talk about newly mapped properties. Now, if there's been a map change and someone has been taken from a BCRX or non-special flood hazard area into a special flood hazard area, there is a subsidized program called newly mapped properties. And this is how it works. So they've gone from a BCX A99 or AR zone into some sort of other A zone or V zone. As long as they purchase a policy within 1 year of that map change date, then they can qualify for a newly mapped rate. It's a preferred risk policy rate for the first year. And then so far, on January 1st of every year in the past, they've had about a 15% rate increase annually. And those rates those increases will accumulate on an annual basis until you hit the standard X zone rate. And then they're automatically capped at that, and they're automatically grandfathered. So let me come up with a couple scenarios for you. Say, for example, the map change happened on December the 6th this year. That means you have until December the 5th of next year to buy a policy to qualify for that newly mapped program. If you're a day late, or a day after that, then you have to go into the standard program and could possibly need an elevation certificate or get some sort of subsidized increased rate. The other scenario is, say the map is going to change in February, like February 5th. If you buy a policy today in a BCNX or A99 or AR zone, it will be a preferred risk policy. And then upon renewal, because it's within that first 1 year period of the map change date, it will be renewed at a preferred risk rate. And if you buy it later into the year toward that map change, you will get you'll get that extra preferred risk rate for 1 extra year. And then the increases will happen after that. And the newly mapped program will allow you to stay in it as long as you never let your policy lapse. If you let it lapse, then you go into the standard program and you'll lose the newly mapped property benefit forever. So please make sure that if you have someone that's a newly mapped property and they have that benefit and they're getting close to renewal, it's a good idea to remind them that they cannot let that policy lapse. I do believe we have another poll, the second poll. Can you please help me with that one, Heidi?
I can. So in this poll, we are asking, flood insurance is required in which of the following? In all A or V zones, federally backed loans in special flood hazard areas, wherever flooding has occurred. We're getting some answers. It's kind of picking up.
Yeah, I'm seeing that it's, they're going two ways with it.
Yeah. Okay. Our responses have stopped, so let me go ahead and end that poll and share our results. Okay.
Well, being that if it is required in all special flood hazard areas with federally backed loans, someone may own a piece of property in an A or V zone but choose not to buy flood insurance if they don't have a loan. So there's no requirement, federal mandate, that they have to have it if they don't have a loan on their property that's federally backed. That doesn't mean they shouldn't buy it, though. We agree with that, Heidi?
I would definitely agree with that, yes.
Yeah. Okay. So moving right along. Let's talk about grandfathering. And this is very important because as we showed you with the newly mapped properties, grandfathering will become part of it. So we talked about what a firm is. So a PreFirm building would be a building that was built prior to any flood maps or community participation. So they're normally older homes. The flood maps began in 1974, so anything that's pre-74 is always going to be PreFirm. Then, whenever the community date was, so say, for example, it was 1984, anything built before that community date of 84 would be a PreFirm building, where a post-firm building is built on or after the original firm date. Now, keep in mind that PreFirm and post-firm are always based on the original firm date, not subsequent firm map change dates. So, if you're a PreFirm building, before newly mapped became an issue or a benefit, PreFirm buildings had to buy a policy before the map changed, and then they have never let it lapse. So, if you have a client that you have either gotten through a broker of record or have had for a long time, on their declarations page it will say grandfathered. If that policy ever lapses with a PreFirm building with a grandfathering benefit, they will lose that grandfathering benefit forever. There was no way to get it back. So that's a constant thing to remember. Also remember this, that if someone has a grandfathering benefit on their property, it can be endorsed over to a new buyer or a change of ownership. So it has to be done before at closing. So the property is being sold, it has to be done at closing to keep that grandfathering benefit going. Or they qualify as a newly mapped property, and then the newly mapped property rules will apply. Once that property has had increases that turn it into a grandfathered policy, and they let it lapse, they still lose it. They can't get it back. Now, post-firm grandfathering is a little bit different because they are what we call built-in compliance. And they can grandfather in either the zone or their base flood elevation when originally built. So, post-firm structures can always be rated in the zone in which they originally built in. So if a post-firm building was originally built in a BC or X zone, that zone can be figured into the rate at any time. You just need two specific documents. You need to prove when the building was built, and you need to prove what the zone was, or the base flood elevation if you're going to use that, when the building was originally built. So, say for example you have a firm date in 1984, the building was built in 1990, and then the latest map date available is in 2000 when it's in an AE zone. So when you're in the application and it pulls up the zone determination, it's going to show that it's in an AE zone. And then if you put grandfathered no, it's going to ask for elevation certificate information because the system believes that it was originally built in a special flood hazard area. However, that may not be the case. So, as Heidi mentioned before about floodplain managers, each community has some kind of a community official. It's either going to be called a floodplain manager or something else. They call them floodplain managers mostly. And you contact the community official and find out, based upon a particular building date, what was the zone on that building date. Usually it's the building permit date. And they will send you a document that tells you when the building was built, what the map panel number is, what the zone was on that date that it was built, and sign it and send it over to you. Then you have to prove when the building was built. So it could be a copy of a building permit. An assessor's report is very common from the community official, or excuse me, from the community website. They can get you, you can go into the assessor's page of that community website, put in the address, and it'll give you the original building permit date and what type and how it's zoned. Is it zoned? Is it agricultural? Is it commercial? Is it residential? That kind of thing. Or a loan document that has the year built on it, as long as it's at least a year after the firm date, original firm date. So grandfathering can be done at any time. Also, they also can qualify as a newly mapped property as well. Do we have any questions concerning that, Heidi?
We do. One thing I kind of want to reiterate in something that you said, and it certainly answers the question that Jamie put out there. And Jamie's question was, if a policy the insured has had in effect for several years has been remapped from an X to an AE, and they've been grandfathered to the X zone rates, and now the insured wants to cancel and rewrite the policy to make it concurrent with its other insurance state, would they lose grandfather rates? If there's an interruption in that grandfathering and there's a lapse of any kind, that policy is canceled, they will lose their grandfathering status.
That's correct. You have to have continuous coverage.
Continuous coverage. So you do not want to have any type of interruption in that policy. So in that scenario, Jamie, I would not suggest that they do that. That was the only question, George.
Yeah, we get that a lot, especially when you have people that have homeowners associations, and the association has decided that they want a flood policy for all the members there, and they vote to do so. And then as property gets bought and sold, those policies get lost and new ones are bought, and they want to collect money and pay it one time a year, and then you have all these different renewal dates. So I hear that a lot when you have agents out there that do a lot of homeowner associations. So it is an issue, but it's just something that you have to deal with. Now we're going to talk about elevation certificates. Mostly they can be well, there are several things actually. It can be an administrative tool for the NFIP. So the more that is done, the more of those that are out there, it helps. Surveyors have helped come up with definitive information on where the buildings are in association with the established water level, where the base of the foundations lie in development or older buildings that are out there as well. It's an administrative tool. They also ensure compliance for the NFIP, National Insurance Flood Program, and the community to make sure that they are doing everything they can to be in compliance with the flood program's desire to keep buildings, especially ones that are being built above the floodplain or the insurable floor above the established water level. And as we can show, they determine the rate based on risk. So for example, if the base flood elevation is the higher it is above the building, 1, 2, 3 feet of water getting into a building and it shows it, the higher the water level into the building, the higher the rate. If it shows that the insurable floor is above the established water level, then you can either show that either the foundation is above it or that the water line is below it, and you can get a discount on the property by using the elevation certificate, or possibly apply for a letter of map change. So it does support those letter of map change requests. In addition to that, elevation certificates, keep in mind they're always required in PreFirm buildings originally built in special flood hazard areas other than A99 and AR. Substantially improved properties. So, for example, you have a building that's a cottage that was built in 1954, obviously a PreFirm building. But for some reason, it's been substantially improved to half the value of the building or more. Now, we're not talking about just redoing the inside, just putting in new kitchen cabinets and new carpeting and everything all at once. We're talking about substantially improved foundation, extensions, additions, things like that, that actually change the building to half of the value or more. Then it's required that the building owner uses the latest building permit. And then that could change a PreFirm building into a PostFirm building. And then you have optional PreFirm risks. So let's get into this a little bit. Since PreFirm buildings do not necessarily have to have an elevation certificate, and I say necessarily because I'm going to explain that in a second, the PreFirm rates are going up, especially the standard, which are the subsidized standard rates, are going up considerably, especially for commercial, rental houses, apartment buildings, and severe repetitive loss structures, pretty much at a rate of about 25% annually until they hit the actuarial rate. And the actuarial rate is, what does the elevation certificate say? So, since PreFirm buildings were built prior to any maps, they are considered to be built out of compliance with the flood standards after the maps have been established. Because of that, many times the PreFirm buildings are below the base flood elevation or established water levels, and the rates can be really high. But with these rate increases, you have to figure out when that actually happens. Now, if, for example, you get an elevation certificate and it shows that the rate should be much higher than the current rate, you don't necessarily have to use the elevation certificate. You can wait until the increases accumulate until the elevation certificate will cap the risk. Now, when I said usually, there is one time when a PreFirm building must have an elevation certificate, and that is if it's in a special flood hazard area that is not A99 or AR, that it has a federally backed loan, and that policy has lapsed after 90 days. It needs to be reinstated and rewritten, and at that point it must have an elevation certificate to rate it. So are there any questions? Heidi? No? Okay. Let's get into some of the websites. NationalFloodServices.com has come up. If you saw the beginning of this particular presentation before we got into it, there was a slide that talked about NationalFloodServices.com. It's an ever-expanding site. We've got small little videos to give you specific information on short little ideas such as deductibles, or it could be grandfathering, or it could be about a specific flood map area. A lot of different, we're hoping to have about 150 of those available to you, anywhere from a 30-minute snippet to 2 minutes, 2 or 3 minutes. Also, our customer service line, and don't forget live chat through the application system. You can sign up through NFS Communications. If you want updates, you can either use the website shown on the slide, or if you go into Flood Pro's application system, on the main page down, you can scroll down, and there will be a link that gives you that updates. We won't inundate you with anything other than what is coming up with the flood program. Might be reauthorization news that should be coming up pretty shortly, because the 21st of December is coming quickly. The NFS Agent Development Team, we have a website there, so we can help you with that. FloodSmart has 2 lines. One is for links. One is for the consumer, and one is for the agent. You can register on FloodSmart to get all kinds of marking materials that are also available to you on nationalfloodservices.com. And then you have the National Flood Insurance Program, FEMA.gov/National Flood Insurance Program, or you can just put /NFIP. So, Heidi, are there any ending questions before we let people go on their merry way? Okay, I guess not. Thank you very much for attending. If you need to get in touch, just use agent development at nationalfloodservices.com. Thank you so much for participating.